Hello, everyone. I'm Sandali Handekama, and I am a global reporter at CoinDesk. It's my pleasure to welcome you to the Middle East and North Africa edition of Crypto State 2021. Crypto State by CoinDesk aims to connect with local communities to explore how crypto and blockchain trickle down to every corner of the globe, from DeFi investment opportunities to alternative ways to transact and store wealth. Today, we'll be taking a closer look at the Middle East and North Africa, or MENA region, exploring how different markets over there are thinking about crypto, roadblocks and challenges for businesses, and crypto's impact on the region overall. To kick things off, I'd like to introduce our keynote speaker, Matthew White, partner and digital trust leader at PwC Middle East. Matthew has worked in the region for almost a decade and will give us a snapshot of crypto in MENA, its past, present, and maybe what we can expect to see in the future. Matthew, welcome to Crypto State.
Thank you very much, and thanks for having me. It's a pleasure to be here. Look, as you said, I'm going to try and give a broad brush overview of what's going on in the Middle East before the panelists probably tackle some of the deeper topics. But first of all, I wanted to contextualize the Middle East so everyone has a better idea of kind of what we're dealing with. In summary, it's really big. And there are a lot of idiosyncrasies and dichotomies that make it difficult to generalize. So there are about 18 countries that typically are considered as Middle East. They occupy a landmass more or less the same size as the United States, and there are about 380 million people, which is a bit more than the United States. Some of these countries and some of these people are among the richest in the world, and some of them are among the poorest. And there are a wide range of religious, political, and economic ideals which make each country pretty unique in its own right. And it's the same where cryptocurrency and blockchain is concerned, frankly. So I'm going to try and be as specific as I can during this intro, rather than making sweeping generalizations that might not hold true depending on who you ask. And it probably also means that I won't get to cover all aspects of that 18 countries as well. I'll try and pick on the most important stuff. So a few years ago, probably around the time of the ICO boom, at the peak of that in 2018, I was part of an interview with Forbes, broadly looking at the Middle East state of play when it came to blockchain and cryptocurrency attitudes and regulation. And there was a lot of excitement at the time. I would say more so around blockchain technology than crypto. In fact, at the time, I think the UAE had just released their blockchain strategy, which was talking about 50% of government transactions being processed using blockchain technology by 2021. Governments were a bit warier of cryptocurrencies at that point, and there was a lot of uncertainty around regulation, not too dissimilar from the rest of the world. Some countries like Saudi Arabia and Kuwait were warning that these digital assets weren't legal. Others like the UAE were more guarded. And we'd already started to see the emergence of some crypto asset businesses like BitOasis. If you fast forward 4 years, those attitudes are still quite fragmented, to be fair, but there's been a lot of progress and increase in activity in certain areas. In the interest of time, I'm going to talk mainly on the crypto digital currency front. It's very topical at the moment, but there's probably been more consistent and less fragmented progress on the fintech and blockchain technology scene, more or less across the board. But if you look at that crypto digital currency component, there are a couple of major things that are driving activity at the moment. The first of those is regulation. So in the UAE and Bahrain in particular, but also in other jurisdictions to some extent like Kuwait, we've seen these crypto asset regulatory regimes emerge as a result of some pretty significant investments from governments and also from some of the independent regulators as well. So in the UAE, we've now got onshore and offshore or free zone regulations governing crypto asset businesses. We've got several businesses like BitOasis becoming fully licensed, and there are many more in the licensing process. We've also got a listed fund on the NASDAQ Dubai and a bunch of other private funds operating in that space as well. Where Bahrain's concerned, there's also been a lot of investment from the Central Bank of Bahrain in the crypto regulatory frameworks. We've got a fully licensed crypto asset business RAIN operating there. There will be more businesses about to be licensed as well. And in Kuwait, we've also got a regulated exchange called DigiDinar operating in that jurisdiction as well. So this regulation's brought trust, and it's that trust that's encouraging the likes of retail investors, high net worth individuals, and family offices activity in this space. And the exchanges are reporting having seen billions of US dollars in trading volumes. It's probably fair to say that the Bitcoin price activity over the last 6 to 8 months has been a source of attention as well. But this kind of clarity around regulation has been really, really powerful for the region. And regardless of these recent headwinds in the crypto market, I think demand from this category will continue to rise, especially now we've got this introduction of more familiar traditional financial instruments for investors to access. And I'm referring to the listed fund that I mentioned just a minute ago. It's also probably worth mentioning Saudi Arabia at this point. It's the biggest economy in the region. Saudi has invested heavily in fintech with the Fintech Saudi Hub. And while there aren't any specific prohibitions on the types of fintech businesses that exist, the regulator continues to show its hesitance in dealing with crypto. So banks and financial institutions can't deal with them without approval from the regulator, but consumers can trade with cryptocurrencies and experiment, as kind of exemplified by the existence of some crypto ATMs in there. They don't have any financial protections, but some of the exchanges in the region also offer the ability for these consumers to transact. So there's certainly demand coming from Saudi, which is contributing to this kind of activity and this buzz. So that's regulation. The other major thing driving activity, and arguably longer term and more important one in my opinion, is this topic of financial freedom and remittance. And I think this is probably driving more interest and activity in terms of numbers of people. And I think there are two very good case studies of this in the UAE and Lebanon. There are others, but they're probably worth touching upon in this brief intro. So where the UAE is concerned, about 80% of the UAE's population are expats. And according to a study from Nomad, I think the UAE is probably the second highest remittance outflow in the world at around 43 billion US dollars. But we've got a bunch of migrant workers that are facing high fees and long wait times to be able to send money. And many of these people are looking at cryptocurrency as a solution. There are likely to be a lot of challenges with this. I think on and off ramps are going to be difficult to access because of the compliance requirements that many of these migrants won't be able to meet. So things like proof of residence, etc. But I think the other risk, and I'll probably touch on this a couple of times, is this lack of education. For example, Dubai police recently said that about 80 million dirhams, which is about 22 million US dollars, has been lost to crypto scams in the first half of 2021 alone, which is pretty significant. People aren't adequately safeguarding themselves, and as long as that continues, the adoption is going to be stunted a little bit, in my opinion. And it's not just scams where education is concerned. I think that the fact that we're hearing of these migrant workers considering putting their savings into Bitcoin is probably quite risky given the volatility as well. So I think that education is really, really important. Where Lebanon is concerned, the economic situation is arguably much worse, with deteriorating economic and financial conditions and hyperinflation. And over the past 2 years, the Lebanese lira has probably lost about 80% of its value, I think, as the local banks have imposed capital controls, put limits on cash withdrawals, transfers, international spending, and now fuel subsidies are also being withdrawn. So what you're seeing is the Lebanese people are increasingly turning to crypto for transferring and remitting money. And many of them are kind of very frustrated with the banking system and the lack of trust in that. It's pretty difficult to get official statistics, but one report in the Arabian Business suggested up to 100,000 people might be buying and selling cryptocurrencies at the moment, which is not that surprising, really, when you see that the country relies on inward remittances up to the tune of about 30% of GDP. And fees for these inward remittances can be as high as 10% when you're looking at transferring from places like the US. But even if you transfer cryptocurrencies into Lebanon, there's still the issue of being able to use it. So Lebanon is on the sanctions list, which makes it difficult for some remittance platforms to operate. And people are being forced to deal with brokers who can charge up to 5%. So even though you get into the country, you're still facing that challenge of fees. We are seeing a growing number of local businesses popping up that will accept Bitcoin, but I think that is kind of slow to impact. So even if people don't understand the risks in this case, desperation has translated to increased use. And as with the UA, scams are on the rise as well. And I think that's where I'll leave it in terms of sticking to my time. In summary, the Middle East is very big and the state of crypto varies dramatically across the region. We've seen a massive increase in adoption in certain parts of the region, driven in part by regulation and in part by economic necessities. And I think we'll probably continue to see that in the coming months and years. Regulation is going to continue to improve. We'll see an increased choice of businesses to interact with. We'll also see this investor landscape mature with more access to traditional financial instruments. And I don't think this topic of remittances and financial freedom is going to go away. There's just too many people that this technology or monetary revolution or whatever you want to call it is going to be life-changing for, and where there is a will, there is a way, I guess. So I don't think that part of it's going to go away. What we probably need to do as a region is to sustain this education. And I think opportunities like this from CoinDesk are actually a pretty good starting point for that. So I'll leave it there. I'll hand over to you and our panelists, who I'm sure will have a lot to say on the topic. And once again, thanks for having me.
Matthew, thank you so much. That was beautifully done. Like you said, it's a big region and a lot to cover. I think you touched on everything important so beautifully, and it was an extremely insightful overview and perfect lead into our next panel. I'd like to welcome our first panel today, where we'll be looking at the crypto industry in the region from the perspective of investors. So thank you, Matthew. Joining the panel, we have Ralph Glebishnig, founder of Crypto Valley VC, Joseph Holm, founding partner at blockchain venture studio and fund Draper Gorenholm, Riyad Abu Jaoude, junior partner at Middle East Venture Partners, and Elon Aviv, investor in residence at Collider VC. A big thank you to all of you for joining us today. You all represent entities that are quite heavily invested in the region and might even be looking to get more involved. So I think what we all want to know first is why? What kind of potential do you as investors and incubators see in the crypto industry when it comes to MENA?
Who should go first?
Exactly.
I'm happy to take this one.
Yeah, you can start and then we can go from there.
Why not? First of all, thanks for having me. It's a pleasure to be here. This is it's a great question. It's a great panel. It's a very interesting thing that's happening for me as an immigrant to the United States. I've lived in California for 10 years, born and raised in Austria. And, as you know, it was every tech entrepreneur's dream to move to California, ideally to Silicon Valley, and, become the next Mark Zuckerberg. And now we live in an industry where for the first time, not only do companies not want to go to the United States, and if you're a blockchain startup, if you're going to launch a coin, you're going to go somewhere else. But also you see US companies looking for new homes. They're actively leaving the country to places like Dubai, where you have regulatory clarity, where you have a friendly attitude from the government, and where, frankly, we as a venture studio and the fund that is based in California, now we see a lot of potential. We think there is going to be a lot of deal flow coming out of that region, especially out of Dubai, because it's making itself so open, so attractive for startups to come there and set up shop compared to the United States. So for us, that's the main reason. We want to be there early, and we want to be part of that growth and that ascending of Dubai to a global blockchain hub. I think that's very interesting.
Amazing. And Who's next? Anyone want to chime in? Riyadh?
Yeah, hi. Thank
Hi.
you, Sandali. Yeah. So let me first start by saying that we've already, as MEVP, we've already done an investment in the space. We invested in Rain, which is a cryptocurrency exchange based out of Bahrain, with presence across the region. And for us as a generalist VC, not specifically focused on crypto as a fund, we see a huge opportunity in the region, and we've invested in many. If you want, companies that across various sectors that follow what's happening, whether in India, China, or US, and in crypto, it's not an exception. When we see huge businesses being created in US, in Europe, in China, etc. We know that the MENA region, when you add Turkey also, Pakistan, and recently Africa, places such as Nigeria and North Africa, the opportunity is very big. There are various challenges across the region, whether like what was mentioned about Lebanon, or if you look at the application of crypto in Nigeria, etc., we see a lot of use cases for crypto in such countries, specifically Pakistan, Turkey, Nigeria. Lebanon is tiny, but the other countries are big. And plus, as an investment for cash-rich GCC millennials. So we see a big opportunity. We've done an investment in Rain, we're reinvesting again, and we're looking for other applications. But I was looking at the numbers today, and I think I gathered about $50 million invested in the space in MENA versus this year, versus 1.8 billion in Europe and 6 billion in the US. So in H1 this year. So the numbers are tiny, but the opportunity is big. We will see a delay compared to the rest of the world, but investments will come because there's a big opportunity.
Great, I would love to jump into that. Thank you for that. Ralf Klabischnik from Crypto Valley Venture Capital, sitting in Switzerland, in Zug exactly. So a few of you may know the place. We already have more than 900 companies in the blockchain space in Switzerland. 11 out of them are unicorns, beside Ethereum, Tezos, Cardano, and so on. And we have seen the opportunity in Dubai growing since 2016. We did a joint partnership with DMCC in Dubai, opened up the crypto center there, worked with ESCA on the regulation. And especially in the last year, we have seen a lot of talent moving to Dubai. So infrastructure was there, capital is in the decentralized world, decentralized, but talent missed a little bit in Dubai. But Dubai handled this pandemic very well. And since last year, July, we see a huge move from smart guys like Joseph and the teams going to Dubai. And that's a great opportunity for us, and see also the first projects there, homegrown projects in the UAE, in the MENA region, which are interesting for us to invest at the end of the day.
Yeah, so I'd like to chime in and maybe take a bit of a different angle. So first of all, my name is Elon, and I'm from Collider Ventures, which is out of Israel. And I think what's sort of special about Collider is that we are first crypto people, and then we became sort of like venture capitalists. And you know, the promise that we see, or like why do we invest in the region, why do we invest in companies around this sector, is because this is a disruption for government, essentially. Government and government services and banking services, and you know, central points of power. And I think there's probably some graphs to justify this, but you know, the more corrupt a government is, or the more hold the banks have over a certain country, the poorer the situation of the general population will be. And I think this entire revolution is about them. It's about really banking the unbanked. And you know, today you can have on your phone a bank account. You can earn essentially interest for your holdings. You don't have to go to anyone. And this is what this revolution, you know, sort of presents. And I think, yeah, there isn't a short of corruption in governments in the Middle East. And you know, at the end of the day, the purpose of this is to disrupt these guys. So
amazing. And kind of going off on that, what kind of projects are you supporting as investors or looking to support, and what kind of problems are they trying to solve? I know Matthew spoke of remittances, and Elon, you just said governments and disruption. There are a lot of experiments with digital currencies going on. So what are you looking for? I think Riyad touched on this as well, but in a bit more detail, what kind of projects are you focused on? Anyone?
Yeah, sure. I'm happy to take this one first again. Ideologically, I'm totally where Elon is, and you know, my heart beats for DeFi, and less regulation is better, and all that, right? So we invest on that spectrum, side of the spectrum, but we also invest in security token startups, like you know, a blockchain solution called Onera that we were early supporters in. So we try to cover the whole spectrum, because you know, at the super early stage that we invest in, we primarily invest in teams, right? Everyone's going to pivot a little bit. So, you know, the first iteration of their business plan is not what they're going to be launching, as we all know. So that's really, we're looking for strong teams, right? So that's the one most important thing. And the rest is, you know, has to be a viable product, of course.
Probably I want to jump in on that as well. I met, for example, Ahmed Al-Balaghi in Dubai, and probably a few of you guys know him by Economy. He finished a 9 million raise a few weeks ago. That's a nice story. That's, for me, one of the first stories I heard of a homegrown startup from there. Of course, Rain is on an international level famous. We have seen Shisha Finance this year, also an interesting startup. So there is a lot of things going on. And the important thing is not only international projects moving to Dubai, also people kicking off projects there, and like Joseph Horn with his team, starting to build projects there. And this is the change from only moving people there from an international level to get homegrown projects.
Yeah, I can add that you know, our focus in general is sort of like very deep tech at the intersection with crypto. One of these things could be like, this is an effort that we have right now, is to bring the cybersecurity market and sort of like the cybersecurity experts of Israel onto crypto. We just had what possibly be the biggest hack in DeFi of $600 million just yesterday. And one of our focuses, to create an open table and, you know, have education forums and invite experts in the industry to come and look at, you know, how can we solve like some of these problems. A lot of what we're doing is around education and trying to figure out how to bring, you know, these smart people. And the reason is, you know, that the learning curve to understand like a crypto startup or to build a crypto startup is so big, especially when you don't come from the field. So this is essentially a lot of our focus. And yeah.
Probably another thing to that, Elon, thank you very much. I mean, since last year, in August, I think it was, the relation between Israel and the Middle East got much better. So this gave a big boost to the business over there. We just right now invested in GK8, by the way, so in an Israeli-based company. And I think deep tech companies are really strong in your area. But when you focus on the bigger region, and what we heard before from the gentleman from PwC, there's a big market around Dubai. I mean, if you take the area 4 hours of flight around Dubai, I think you can reach 2 billion people, and that's a huge market for us and for the startups there.
I'd like to jump in with a question from our audience, actually. Someone wants to know, what are local startups' edge versus global leaders? I think that's an interesting one.
Yeah, maybe I can answer this, because we've done this in many industries. It starts with solving local problems. So anything from using the right payment infrastructure and right payment methods, to the right messaging, to the right advertising, the right community creation, etc. But specifically for crypto applications, I think the region is a mosaic of various countries with various needs, right? You have North African countries, you have Middle Eastern, Levantine countries, you have Turkey, Pakistan, Saudi, etc. And each one of them has different problems. What we are seeing in certain countries like Nigeria, like recently in Lebanon, solving, and before that in Turkey, solving deep pains of financial collapse, etc., and restrictions around capital inflows, outflows. If you want gatekeepers, what was mentioned before around, fighting the establishment, so to speak. We're seeing a lot of innovation around this. It's, really early ideas, but could have a greater potential. And in general, if you look at Rain and Bitoes, what they have done is basically being an infrastructure play, giving access. Not infrastructure, but giving access to buying cryptocurrency for residents of the region, whether it's offering the right currencies at the right rates, the right languages. For example, Rain is focused on Saudi, so you see a lot of Arabic speaking support, etc. And this is important. So there's a range of spectrum where local startups could have an edge. Now, I'd be cautious to say that they can compete globally. Potentially, we might see one or two, but in general, the region, focusing on the problems of the region, is a deep enough problem that merits big investments and hopefully great returns.
Amazing. Thank you for that, Riyadh. Anyone else would like to add to that, or I have another question?
I just want to say that, specifically in this, we really leveled the playing ground in like the ideas that can come up, and a DeFi protocol could be coming from the US or from Silicon Valley or from somewhere in Europe, but just as much it could come from the entrepreneur in in Egypt or in Lebanon or in Israel, and like it's no longer centered around Silicon Valley, which is what's interesting. So I would say the ratio is the same, like to the amount of people that are in a certain region. So yeah, I'm really hoping to see like more startups coming out of just the area.
I fully agree with you. When we see what the GAFA companies did to the tech industry, so Google, Apple, Facebook, Amazon, our hope in the decentralized world is that we see strong startups from everywhere in the world, and that could be Dubai, that could be Romania, that could be Austria, that could be wherever you want, and that's important in this new decentralized world to get this done.
Yeah, and they're still all going to move to where they have the friendliest regulations and the best attitude from the government point of view, because that, as much as we all like to talk about decentralized finance and DAOs, and there's always a founding team and a bank account somewhere. So you better make sure it's in a jurisdiction that actually supports what you're doing. So that's why, it's just one of the reasons why I think there's going to be a big influx of startups moving to Dubai, and hence more deals coming out of that region.
It's interesting, Joseph, you said jurisdiction support. I have a question from the audience. Someone wants to know, why would governments want to be friendly towards and supportive of crypto if a primary purpose of crypto is to disrupt governments? Anyone want to take that one?
Yeah, I'm happy to take that. I think disruption doesn't mean elimination. Like, we're not talking about going to live in, an anarchist society where, there's no control. Disruption means essentially improving. It's improving the government services. It's improving the banking services, and it's through competition. If something comes up and it's, essentially better, this could be like, I don't know, in 30 years, we might see that the government is run by a sort of a DAO. The structure might not be completely different, and it will still have the same checks and balances, but it will run in a transparent way on a decentralized system where anyone could participate, essentially. So disruption is good. It's not like we want to eliminate them. And I think a lot of government, at least the younger ones, a lot of government officials are realizing this, and they understand that it's in their best interest to start adopting these technologies. I mean, we saw this just in the US over the last weekend, where, you know, the discussion about crypto, you know, made one of the largest bills in history of the United States, like, delayed. So, yeah.
Yeah, then they still didn't get what they wanted, though, right? So they're still worse off than they were 3 days ago, and that just goes to show what's going on in the United States versus Dubai, where they, you know, they welcome you with open arms and they give you all the support they can to make it, you know, work for your startup to come and set up, and you know actually what the rules are, what's expected of you. In the US, it's still, you know, there's so much regulatory uncertainty still. And whatever comes down the pipe, they just make it worse. And it's sad, but that's just the way it is. And on the other hand, I think it's a misconception that DeFi, because we have this argument all the time, DeFi needs to be anonymous. I don't agree. DeFi is great, even if you have to go through KYC, AML. It's still great. You still make a lot more money than you do by putting it in the bank account. So I don't think that one excludes the other. And that kind of regulation is fine, even if that, you know, happens in the UAE and elsewhere in the world. I think that we're going to have to play ball with the governments. We can't just go and think that we're going to develop some tech and then they're not going to catch us, because there's always some team, some VC somewhere, in some regulated country that can participate in a market that's completely unregulated.
Mhm.
Yeah. If I can add, I think the governments here, first there's competition. I think the fragmentation helps. So if you look at you know, Bahrain and UAE and Saudi, there's competition in the sense of who wants to be, you know, the most competitive place for startups and companies to launch their crypto business, etc. They all know it's a big opportunity. So there's healthy competition between the governments, which is accelerating the thinking around how should we you know, regulate this or not regulate this, etc. And the key for me, the key you know, negative thing they want to avoid is terrorism finance. So I think regulating crypto will help governments you know, fighting terrorism financing. So I think everything is in favor of regulation. In a progressive way, rather than, you know, being aggressive on crypto.
Let's be real. At the end of the day, just want to be able to collect taxes, right? So give the IRS the data they need to collect taxes, and they'll leave the rest alone.
The data is already there.
I know.
So.
And we're almost at time, but I'd like one more question to all of you. Put one more question out to all of you. How do you see the landscape evolving around retail investors in terms of mainstream adoption, let's say in the next 4 to 5 years?
Probably let me jump into that. I think retail investors is still a difficult topic when you want to have it regulated. And we have some new regulations in Dubai. ESCA brought out the regulatory framework last year in November, but we have not yet executed companies on that, on security token offerings and similar things for retail investors. I'm really looking forward to that, and we are working hard on that. But I believe it takes a few more years, and a little bit of a protection for investors in the retail area as well is very good, because I mean, we as venture capitalists, we invest in 20 and more projects, and we know that 18 projects probably will fail. If you're a retail investor and you invest in 1 or 2 projects, your result is probably not very good at the end of the day. So some protection in that area is very important as well. Yeah.
So I think that just like, you know, some countries realized in South America of, like, you know, the promises of cryptocurrencies, I think we're going to see that happening in the Middle East as well. I mean, it's already happening in Lebanon with, you know, essentially the currency collapsing and people realizing that they can buy Bitcoin. They don't need anyone. They don't need the government. They don't need an exchange even. They can trade with each other. And I hope to see more of that coming up, and more of that, you know, more of those retail people realizing that they have a different way to save money. And yeah, this this could really, really change the, like as I said before, like about disrupting governments and disrupting banks. This could really change the balance of power between governments have all the power and give the people more power to essentially custody their own funds. And there are a couple of interesting articles about this floating around. So Google it, I guess.
Everyone, thank you so much for your amazing comments and the amazing discussion. We have a lot more questions from our audience, but unfortunately we're a bit short for time and we have another panel coming up. So thank you so much for sharing your thoughts on what sounds like a region just kind of either on the verge or already becoming a kind of game-changing market. So I really appreciate your time and thoughts. Next up, we have a very diverse group of industry specialists to discuss what crypto and blockchain adoption and regulation looks like on the ground. So joining us now, we have blockchain consultant Maya Zahavi, Joseph Dallego, CEO of Rain, Elon El Malia, CTO of Efficient Frontier, and Mika Thompson, head of finance at BitOasis. Welcome, everyone, and it's great to have you with us today. So from our previous panel, it sounded like there's actually a lot happening in the MENA region, both in terms of blockchain tech development as well as cryptocurrency use, with kind of demand and use going up. So from your experience and the companies you're working with, what kind of blockchain tech projects and applications are being deployed in the region to start with? Feel free to jump in.
Yeah, sure, I'm happy to start. So it's nice to meet you all and it's great to be here, and you too, Sandali. There's a lot of positive developments we're currently seeing in the region. We're seeing a boom in the development of crypto-regulated market infrastructure, so be that with exchanges, brokers, custodians in the UAE, Bahrain, and across the region, with BitOasis leading the way. We are seeing increased institutional and retail adoption. For example, the number of signups we saw on our platform in the single month of May this year was equal to the full year of new signups we saw in the whole of 2020. And also revenue, for example, in the first 6 months of this year is almost 3x of the whole of 2020. And plus in the previous panel, as was raised, there was a Bitcoin ETF launched on Nasdaq Dubai in June. And that's made headlines around the region. And this really signals that crypto adoption is on the up in the UAE. And then blockchain projects by the UAE government. There's government initiatives to launch tokenization for platforms to provide SMEs with debt and equity financing, and that advances transparency. The UAE Central Bank is set to introduce its own digital currency as part of its 2023 to 2026 strategy. That's the central bank digital currency. We understand the Central Bank of Bahrain is working with JB Morgan to pilot cross-border payments. So we're very, very excited about what's happening. There's a lot more to come. And yeah, so I'd definitely say MENA is definitely one to watch.
Amazing.
Yeah, and I can go ahead and riff on that. I'm Joseph Dallego, co-founder and CEO of Rain. And yeah, we're certainly seeing the amount of usage in MENA just skyrocket over the last 6 to 8 months. I think MENA came onto the main stage of the cryptocurrency world for the first time in the last year in a really big way. I think that similar to what Micah was saying, I think we saw the Central Bank of Bahrain do something really unprecedented in 2019 by releasing the first crypto asset regulation in the MENA region. For the first time, and this, less than 10 governments in the world have released this type of regulation. So they showed a lot of foresight with that, and it's provided a lot of regulatory clarity for our company and a big opportunity to serve the Gulf. So that was really exciting. We've also seen a lot of great work in the UAE. ESCA, as well as the ADGM, have released similar regulatory frameworks that are getting a lot of great work done on them as well. And we also see a massive potential in Saudi as the Gulf's biggest market in the future as well. So yeah, lots of really exciting regulatory work being done. And just, I think there's just so much usage in MENA these days that alone is something really notable. More people today are storing their assets and using crypto as a payment rail than ever before in history, and I think that alone is a really huge accomplishment for the region.
Maya, I think you're on mute. If you want to chime in, or
thanks. I was just saying that Israel, everything we've heard about, all the progress going on in the Gulf, Israel is very far behind in that regard. We have maybe 2 events that are of any significance, and that is that the biggest Israeli institution, Al Shacham, bought on their Nostro $100 million of Bitcoin. And just this week, we had the first trust, Bitcoin-based trust, kind of like the Grayscale one, being launched here in Tel Aviv. But in every other regard, there is nothing on the ground or any progress. Israeli regulators are probably ultra conservative in that regard and look at crypto trading and blockchain tech very, very suspiciously. On the other hand, a lot of Israeli companies that really specialize in deep tech, in cryptography, in custody and cyber solutions export a lot of their tech solutions to other governments in the Gulf and the MENA area.
yeah, I would add to that. I think also here, I'm from Israel. I think we've been in this space for many years, and notable people from the community have been in early days of Ethereum and early days of Bitcoin, but always as on the tech side, on the research side, and more pushing as Myron to like exporting a lot of the deep tech that's been done here. So there's a lot of custody and security solutions, mostly focused on on scale. So not only Fireblocks that's raised a large round recently, Curve that's been acquired by PayPal, Starkware that's doing ZK rollups on Ethereum. So there's a lot of very deep infrastructure work being done, but not. But the target market is not the local market. And in terms of DeFi and dApps, we've seen founders being very shy based on this lack of clarity and regulation. A lot of developers either not deploying an idea that they have, or doing it anonymously, or the fear of being prosecuted as developers in the space. So yeah, we've been in this for a long time, but the regulation hasn't moved a bit.
Let's thank you for that. Let's talk a little bit more about regulation and the level of ease when it comes to businesses navigating the local regulatory landscapes. When it comes to licensing, taxes, and AML, what are some of the challenges you're facing or you think businesses are facing in this aspect?
I think in Israel, you don't want to be a crypto business in Israel. You can't launch it from Israel. You're always going to be offshore. And even if you're paying salaries under a subsidiary in Israel, it's also very problematic. Also in terms of investments, I mean, I think Elon, an outlier, would be hard pressed to think of their latest crypto on the ground Israeli project they invested in. They just don't exist, like Elon mentioned. It's not because that there is any regulatory action against developer. It's more a byproduct from the 2017 ICO age, where Israel became a hub for a lot of shitcoin factories. And we got that name because of those certain individuals that made a lot of money, had some tax issues behind them, and drew a lot of scrutiny into Israel. Now, add that to the fact that the Israeli regulators are super conservative and have a lot of fear of money laundering, and it just becomes almost impossible or unnecessary to start a crypto business based out of Israel. So in that regard, I would say that when you compare that to the different frameworks in the UAE, in Bahrain, and all that support, the government support that brings in business, there's literally no comparison between the two.
For
Yep.
Oasis. Sorry, I would say for BitOasis,
No worries.
we're the #1 and most trusted platform in the region. We've been around since 2015. We've built our position and market share by working together with regulators and building world-class compliance, KYC, and AML processes. So the regulators are very supportive of innovation with a mindset of protecting customers. And they're very supportive regulatory frameworks, especially in ADGM, who we work very closely with, as we will soon be launching our regulated platform from ADGM. But with that said, working in a new and fast technology growing space is never easy. And there's been times when there hasn't been clarity. But our ethos has always been that regulation is part and parcel of what we do. And the only way for the industry to sustainably grow and mature is to work together with your regulators. So we really want to be the leading voice of crypto within the regional regulatory circles to ensure we have the right and progressive regulation to drive the growth of the industry, as well as the infrastructure across the Middle East as a whole. Sorry, Joseph.
Yeah, no worries. I can riff off of that as well. That regulation has always been really core to our company. We had options to take different routes along our journey, but we always really made sure to go the most trusted, regulated path every step of the way. And we did that because we think that customers ultimately value regulation. They value that clarity that what they're doing is above board, is legal, and that's what we saw as the most long-term route for our company. We want to create a company that lasts for decades. We love this industry and we love running this company. So regulation has always been core to that vision for us. And I'd say also regulation has just improved the quality of the company. It makes companies really consider things that maybe don't get enough attention sometimes. So it's a really symbiotic relationship between regulators and companies, and just making sure that everything is that everyone's keeping the right things in mind. No regulatory environment is perfect. We've definitely seen our fair share of challenges. I'd say the biggest challenges that I'd say we've had are I think there's been so much really positive progress on regulation in the region, but I don't think we're moving fast enough. I think we really need to move faster. I think where my head's at is if we want to compete globally with the rest of the world, if we want to create companies that serve people globally, I think of Emirates a lot, where it's a great company that calls the Middle East home, but it serves a global customer base. It has they have flight paths all around the world, and I love flying Emirates. That's kind of what we want to build. Is we want to build a company that calls the region home, and then serves the MENA region, but serves really a global audience as well. So if we're going to be viewed in the same light as the Coinbases and Krakens of the world, we need regulators that are progressive and are willing to move quickly and get us to the point where we can compete. So like I said, I think we've certainly had an incredible opportunity in the region, and we're excited for how things are developing. But we would just ask that things move even more quickly than they are, because all regulators of the world should be taking this industry really seriously. It's incredibly innovative, and we think that there's a huge potential for social impact. So there's that. And then the other thing I'd say is just KYC requirements. We really see the value in obtaining information from customers on who they are and their identity. But there is a line to be drawn there between, customers who, if a customer is going to come onto the platform and do, $5,000 for example, in transactions, we have to draw we have to draw a little bit of a compromise there in terms of what we are going to ask them for verification. So there's a bit of a spectrum there. And KYC requirements have certainly are more stringent than we've seen globally in the region. So I'd say that's one big hurdle that we've seen.
Allow me to just add to that. I think that right now we're right in the process, like we saw in the US over the past week, where the US is suddenly motivated to come up with a real crypto framework. And the financial world is very, very different in terms of regulation than the aviation world, despite the fact that the FAA or regulators also operate in Europe. Finance has historically always converged to what the US has said, and we could look at FATCA a few years back to see where that happened, and also binary options. Meaning right now there's a race around the world, not only in MENA, where the most open and friendly crypto jurisdiction is. But I think in a year or two, we're going to see that every jurisdiction that considers itself like upper class regulatory jurisdiction is going to revert to what the US wants, right? Just like FATCA. And they have the option and the privilege and the burden to basically dictate what the minimum requirements are to operate with US people. And we've seen that all across crypto, where margin trading or derivative requirements are, first of all, they launch and they're open to everyone. And then we see more and more chunks of different citizenship, accredited investors, and KYC requirements being put on clients if they want to operate from the US, and other countries basically emulate those requirements. So I think it's very important for countries to be competitive, but there are different aspects to that. One is the government looking at this technology as a tool in order to integrate that and build its own services for people and its financial market. And then the other side of that is how open are they for crypto assets, for tokens, for DeFi organizations to sit in that jurisdiction. So those are really, really two very different markets. And on top of that, we have basically the crypto venture investments and those companies and how they can operate within each jurisdiction. So I think there's a lot of overlap between those three separate markets, but they're not mutually exclusive, which is my point.
Thank you, Maya, for that. And thank you for all your comments. This is a great discussion, and we're getting a lot of questions from our audience as well. So I have one for you. How will central bank digital currencies affect the crypto market, and how are they different from fiat currency? It's a very general question. Anyone want to take that one and kind of maybe see how that's working in the region?
Yeah, I can take that question just briefly. The audience has such great questions. I'm just I'm loving all the questions coming in, especially from the VC panel. So yeah, I think that central bank, from what we know, we still haven't seen probably a great implementation of central bank backed cryptocurrencies yet. But I think that they would be very similar in monetary policy to fiat currencies, but then they just have the benefits of blockchains, which there are a lot of benefits just technologically. Because of that, you're going from the traditional financial system, which is like a very heterogeneous kind of network of different institutions and different technologies. You think like every bank in the world has a different database that they're tracking transactions through their ledger. And they have to somehow reconcile where all the money's going, and currency. There are a number of different currencies in the world. So doing forex exchanges between different banks. So there's just a lot of complexity there that goes with the traditional financial system. So I think that central bank backed cryptocurrencies really make sense because it gets everyone using the same system at the very least, in terms of all of the banks using the same software, which is exciting. And then you have the difference between central bank backed cryptocurrencies and more of the open public blockchains like Bitcoin and Ethereum. Then that's when you start to get into the difference of monetary policy backing them. So that's broadly how I think about central bank backed cryptocurrencies.
So if I can chime in, I had the privilege to be part of both the process early in 2017 in Sweden and later with the Central Bank of Israel. It feels like, and out of this process, I kind of became a skeptic. I think that there's a lot of questions that haven't been asked yet, let alone be answered, in terms of exactly how do you, what's the sovereignty of each country to be able to issue their own currency, and how does it interact with the rest? But I think the questions are much before that of how to operate in disaster cases, offline transactions, things that are like very much in the infrastructure layer of even how to operate these currencies. I know specifically the Central Bank of Israel worked on this report in 2018, said, okay, we'll wait for more feedback, like what the rest of the world does. There is some new drafts from the last few months, kind of reiterate, like trying to revamp this effort, just because they see what's going around. But I think it's kind of a case of everyone showing that they have some kind of program, but just waiting for the rest to actually make progress. So I wouldn't hold my breath for Israeli shekel, digital shekel, or CBDC.
I've had the privilege and the experience to kind of follow this since like 2015, when like it sounded insane to even suggest to a central bank that, hey, maybe you'd like a digital currency on a distributed ledger, and explaining to them why. So I've seen it also in the ECB, the Bank of England, Israel, and MAS in Singapore. And I think there is absolutely no question that Israel is behind. And they don't even have a project. They like writing reports, and it's a lot of FOMO. But then again, I'm not so sure that's not that different than other countries. I will say specifically about the Bank of Israel that if every central bank's mandate is financial stability, the Central Bank of Israel, their specific goal is to slow the strengthening of the Israeli shekel. And as such, we don't really have a financial market, and that also infers that there is no incentive to create a crypto-based or crypto market in Israel. But then again, there is a need and a lot of debate, just as elsewhere. What is the goal of central banks' digital currencies, right? And what the inadvertent effect on commercial bank money is, as is in every other country. But it's much more sensitive in a country like Israel, where we have about 4 or 5 serious banks, and it's a very concentrated retail banking market. Having said all that, rushing into central bank digital currencies just because of FOMO, or just emulating the same basic designs, whether it's retail central bank digital currencies or wholesale, kind of misses the point where CBDC is really all about identity and the digitization of services to citizens, or having a public public option for a banking rail. And as such, having the CBDC program disconnected for any regulatory blockchain government service is almost a pointless effort. And seeing what specifically the UAE has been doing in that regard, I think they are very much advanced. And in terms of just creating a hub for blockchain programs, I think they've pursued this very, very wisely and smartly, working with others, both foreign companies and with other central banks.
Thank you, Maya. And we have a few minutes left, so I'd like to squeeze in one more question if possible. We have an audience member asking, what are your views upon licensed crypto companies developing ecosystems for use in the UAE for paying for goods and services? What kind of companies are you kind of looking and seeing, hey, this is sort of the future, specific to the region, let's say?
I would say currently in the UAE, payment for services with tokens and virtual currencies is not something that's currently allowed. It's something that could come to the forefront in the future. Of course, we're seeing it elsewhere in the US huge news this year was Tesla allowing, for a short time, people to buy their cars with crypto, tokenization of real estate. So as of today, as a payment method, that's not going to happen in the near future, but potentially further down the line, once regulators are comfortable with that, it could happen.
Awesome. And yeah, maybe I could riff off of that as well. That I think globally, we're seeing that store of value and lending, in the case of DeFi, are certainly becoming the largest use cases of crypto to start. And I think payments is definitely lagging behind that. I think this is something, remittances as well are actually quite common internationally in crypto these days. So that's a budding industry as well. But I think we're still a bit of ways from brick and mortar payments. I think that it's just going to take time for once people start valuing crypto as valuing holding crypto, then they'll be more apt to start paying for things in crypto. So I think it's definitely right around the corner, but it's just going to take more time. So I'd say we don't have great examples of this so far, but I have a ton of great examples of people holding, a significant portion or a modest portion of their wealth in crypto, which speaks to its store of value use case, and or just saving. We've come up with fun new names like HODL for concepts that are as simple as saving, right? So we've got a lot of people these days saving money in crypto because they believe it's a really valuable asset that's going to which we would obviously all agree with. And it's because of the technology. It's because of the way the monetary policy and the way the technology is structured that makes it a really good asset to store wealth in.
Yeah, and echoing what Joseph said, we're seeing trends around the world, especially in the US, where companies are either, want to make the most of their cash, exit their fiat positions because they're worried about the devaluation of currency following quantitative easing, so governments printing money. So they want to put it in crypto because they see, if you ignore the short-term volatility, the medium term is growth, and so they're getting the most out of their cash. Or they could be indirectly investing in crypto via investments in companies involved in crypto. So, for example, Morgan Stanley, they took an 11% stake in MicroStrategy.
Amazing. And we have one more question. Looking outside of maybe Dubai, Bahrain, Saudi Arabia, and Israel, the sort of markets we've been focusing on, one of our audience members wants to know, what about the rest of the Middle East? And are you seeing any trends from where you're standing, or any markets that you think might turn up as promising emerging markets in the future?
Yeah, I think usage on the ground, specifically in Lebanon and Gaza, everything that we've seen going on in Lebanon and the default has actually moved a lot of people into using Bitcoin, both for remittances, but also as a payment method. Also, Gaza, a lot of different donations to NGOs and different payments to freelancers working out of Gaza has also happened on Bitcoin. So I've noticed about 2 or 3 specific companies or projects kind of pop up over the last year from those regions. And I know of 2 projects that started out targeting Venezuela, who are now very, very serious about and are getting a lot of new users out of Lebanon.
Amazing. Anyone else?
Yeah, I can talk about this point that I'll tell you the countries that I'm most excited about for the future being able to serve, and that tend to, or that will likely gain the most out of crypto in the short term. And Maya hit on the point exactly that talking about Lebanon, talking about Egypt, talking about Turkey, countries that have seen a massive amount of currency devaluation. the VC group was talking about this earlier. But I think that these are issues that I really like to focus on the social impact of cryptocurrency, and I think stabilizing world economies, no matter which country you're in. I think Bitcoin and other cryptos have the potential to stabilize global economies. So I'm excited about that for the future.
For Oasis, aside from UAE and KSA, you know, Kuwait has a great adoption rate there. I mean, we're really looking to expand to and serve our users in Kuwait with a, you know, more localized proposition for them. Plus also, you know, MENA TP, so Turkey and Pakistan as well, certainly on our short-term growth roadmap for the near future.
Amazing. Thank you so much. This has been such a cool session. Sorry if I jumped from one question to the next. We're getting so many amazing questions from our audience, and I am sorry that we don't have time to go through all of them. But thank you so much for all of your insights and comments and sharing your expertise with us today. If you would like to add some final thoughts, feel super free to do so. Mostly looking outward and into the future. We talked about markets that you're excited about. What other things that are kind of popping out to you as the most promising things from the region?
I would say that it sounds maybe a bit grim by what Maya and I said about Israel. I think it's just that's the way we perceive it locally. But I think that, you know, regulation is not clear, and Tel Aviv is one of the most expensive cities in the world. But why still come to Israel? So I think that if you're looking for, like, we have a very vibrant tech community that's very skeptic but appreciative of like really deep tech ideas. We have researchers that are willing to get their hands dirty and work on actual implementations and code and like bring their ideas to fruition, and just in general building scalable and robust solutions. And the beaches are pretty nice as well. So I mean, it's a great place to innovate and build new ideas. It's just not sadly not a lot of this is focused internally into the region.
Let me double down on that. I think Tel Aviv is amazing. I think just the tech scene in Israel is unworthy of our regulators.
That's a good one. And anyone else? Joseph, Mika, some closing thoughts?
Yeah, sure. So at Oasis, you know, we're looking to continue to be the #1 platform in the region. We're going to be coming out with some very exciting announcements soon. We are in the process of closing a large growth round. So we're really looking forward to sharing that news with our customers and the space in general. Plus the launch of our regulated exchange in ADGM in the coming months. So we're incredibly excited about that. As we talked about, there's lots of developments happening in the region. So GCC, MENA, TP, watch this space, lots of great things to come.
Amazing. Joseph?
Awesome. And yeah, what I like to add is that not having been born in the region, doing business and traveling to the Middle East for the last 5 to 6 years has been an incredibly meaningful experience for me. I've made, you know, some of my best friends and closest friends and people that treat me like family. So it's and we've built a team of over 230 people at Rain. So we're the largest group of cryptocurrency professionals in the region, working to advance the industry. And it's just been a great joy and a really meaningful experience for me. So definitely everyone needs to visit Dubai, visit the region, visit Bahrain, and yeah, just really looking forward to the future. We've got a lot of at Rain. We've got a lot of really ambitious plans that we're executing on for the second half of this year, and yeah, we'll continue to serve our customers with world-class customer support and a really simple, easy to use buying experience and great banking rails. So yeah, really excited for the future and really proud of our team and what we've built.
Thank you, Joseph, and Maya, Mika, Elon. Thank you all for being here today, and everyone else who joined us. A special thank you to our audience. Thank you for all your questions, really insightful questions, and for sharing your thoughts with us through the session today as well. This was Crypto State by CoinDesk 2021 for the MENA region. Thank you for joining us today. My name is Sandali, and see you soon.